It has been nearly a year since the election, and while the market has been booming for the most part, three, call them classic American stocks, are among the worst performers out there. GE, AT&T, and Procter & Gamble. They have lost the most market cap among the really big ones since the election. Are any of these worth a buy? Dennis Davitt and Craig Johnson are your Trading Nation team today. Dennis, I'll begin with you. These are names that they could turn around, who knows, or they could be classic value traps. They look, they're big, they're well known, they're down, so people assume they're a good value and a good discount. Do any of them look like traps to you? Do any of them look like good deals to you?
For the most part, they look like a great deal of uncertainty around them. I mean, they are U.S. stocks, but primarily their sales are international. So the fact that, the Russell, the smaller cap stocks were the buy on the election because we're supposed to bring stuff back to the U.S. and repatriate back to the U.S. Their overseas sales may help them if the tax laws get put through. But the thing, if you look at Procter & Gamble, it's in the middle of a messy fight right now. A 50-50 vote just happened with Nelson Peltz. General Electric has a new CEO coming in, and people are waiting to see what the vision is there. Every day the stock goes lower. Every day they talk about different divisions that they want to sell off. And one thing that stands out on a lot of these stocks is their dividend is still quite high. As you see these descending values, they haven't cut their dividend. In order to really turn the stocks around, are they going to cut their dividend? And if they cut their dividend, then all the computers are going to sell them for the next 2 or 3 months. So the options market's telling me there's uncertainty there. I don't see a lot of great plays in options in these stocks, and I wouldn't buy any of them because I think if they make the changes they need to make to get great again, they're going to be sold out by their current holders before other people pick them up.
Okay, well said. Craig Johnson, look in your magic chart ball. Any of these names, widely owned, widely looked at, worth anybody's money?
Brian, I think at this point in time the answer is no, and there's a couple of reasons for that. First, these have been relative strength laggards clearly all year long. You look at stocks like Procter & Gamble, for example. The consumer staple stocks have not been, as a group, the place to be, as you've been seeing more of the momentum names continuing to drive this tape higher. I would say in terms of Procter & Gamble, when you look at that chart, we might be setting ourselves up for a little bit of a relief rally. $2 or $3 from here, you come right back into the 40-week moving average, and then you're also just right back into overhead resistance in a spot where I would suspect it would fail. If we next move on to something like AT&T, you just broke through support. You probably have another 2 or 3 downside before you get to the next support level. Again, poor relative strength when you consider the market making all-time new highs. And then lastly, GE. We talked about the stock a week ago. We thought maybe perhaps it was so bad it was good. Well, it's clearly gotten worse. It's $2 or $3 lower from where we talked about it last week, and we weren't overly excited about the stock last week. We're not excited about it now, as it looks like it's starting to make a whole new leg lower at this point in time. So for now, I'd stay on the sidelines with these names. Feels like there's turnarounds that need to take place. They're being supported by their dividends, and at this point in time, it's not a stock that's really got a lot of momentum. It's really going to push the market higher at this point in time, Brian. So avoiding these 3 names.
Do you have any better news, for some of these, especially GE's beleaguered shareholders? Apparently not. Craig Johnson, thank you very much. A negative story there on 3 very well-known and somewhat troubled stocks. Dennis Davitt, Craig Johnson, thank you both very much. As always, folks, thank all of you as well. I'm Brian Sullivan. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.